Okay, folks, Wednesday, the 6th of July, and 2022, and we have had a massive amount of selling on oil yesterday, down about $8. I think we were down on oil. The On the electronic session, it was around about a 12.5% breadth on the move from top to bottom. So, I want to talk about oil this morning in a little detail. We can talk about equities as well. We'll look at the S&P and, of course, the dollar. But really, to focus on oil, and I'm sorry I didn't actually get around to discussing oil yesterday, but just fix that there. Yeah. So look, let's have a look at oil here. I mean, on the dailies, let's really kind of zoom out here. So invariably, a big old move. What was it? Top to bottom on the electronic, it was 12.58%, price differential of $14.02 yesterday. So, not an insignificant day at all. A lot of people saying, well, we're going to $65 on oil over recessionary fears. We have demand destruction at these higher prices. I don't buy into that at all. We have seen times where, oil has been at these prices and demand stays strong. Not only is demand staying strong, but the market remains tight. Also, looming in the background is Vladimir Putin's potential to take anywhere between 1 million and like 5 million barrels a day. Well, there's no saying how many barrels they could take off, but the market is talking about anywhere starting from 2 to 5 million barrels a day off on global supply. Now, with that looming in the air, it's very hard to sell down on oil and to imagine a picture of $65. At the same time, yesterday and the day before, we see Morgan Stanley come out talk about $380 barrel oil on the back of that Putin Russian cut, if you like, which, we don't have any indication of that at this time, but it could be a retaliatory sort of, tactic, if you like, from Vladimir, as we go towards the end of the year with Europe, of course, bringing the bans and embargoes in on Russian oil and gas, right? So, I think it's just a little too early to talk about $65 a barrel. Demand destruction, I'm not entertaining that at all. I don't know many energy analysts who are really seriously entertaining demand destruction at $100 plus of oil, WTI. So look, a big healthy sell-off yesterday, for the energy sector. It's not exactly looking quite rosy as well this morning. But just wiping out a huge amount of value all the way down yesterday. So, now I have been talking about this area in blue, basically 107 38s or thereabouts to 108 50s as the major line in the sand for this market. And I did talk about this live yesterday and the day before. Last week on Friday, with the guys and girls in our room, that we just need to hold this area for us to get up. And if we don't, I said we were going to 100. Now, I'm not Monday morning refereeing this. I did say that last week. And look what we got. We got sub 100 yesterday. So the 100 EMA getting absolutely wiped out. Down to 2011, 2012 lows of 99.13 here, traded this morning actually at 6 a.m., the low at 6. So, can we hold this area? I don't know. I don't think so. I'm not going to pretend that I know every reason why we're selling down here. But I think there's deep value for buying oil here at this price. I think if we do crash below here and below the invasion top at 93.53s, I think the market's just going to be insanely cheap. And I don't think we're going to spend too much time down there. And I'm not alone in kind of holding that view. So there we are. Something to note as well on the natural gas picture and general energy picture is that this Norwegian strike at the gas terminals That has ended now this morning. So European gas futures this morning are meant to be disintegrating off of the highs. So I think that not the protest, but essentially the downing of tools, I think, was meant to last for quite some time, but they've quickly come to terms there and they're back to work. So that's good to see. Not really going to have much of an effect on Henry Hub Nat Gas, bottom left of your screen. So, as we look at the DAX this morning, it's taken a little bit of a bid above pivot. We're going to say goodbye to the DAX and Euro stocks for this session. And let's look at the S&P. So yesterday, pretty heavy, to be honest, on the S&P. I did say yesterday we needed to hold 3809s to be able to stay buoyant here, and what we saw really after I have been talking was a lovely little pullback in and around that 3809's quarter, and then just bang, one-way traffic all the way down, opening drive as well on equities, coming down here and pushing into the 3752s and this sort of trend, which I'll show you in a minute, and then reversal back up, and lo and behold, this thing actually closed positive on the day. I'm pretty sure it was positive. Yeah, so the opening price being there, and we closed just here. So just gonna make that clear there. See there? So we just closed here, opened here. So very strong buying of the dip. But again today, same thing. 3809. We have to hold this area to look to get higher prices. The 20 EMA you can see is decreasing, just a couple of points each day now. So this is a sign that the market may start to close in and above here over the coming sessions, but I'm not expecting anything too wild. We do have the FOMC minutes tonight, not expecting a rate decision. This is the minutes from the last meeting. And then, of course, NFP on Friday. I will be off the desk as of the end of today's session until I return on the 18th, actually Monday the 18th. But I trust you guys and girls are going to be A-OK out there. But just keep in mind that we are downtrending on these markets. Good support shown yesterday. See these daily bars here, the closes, nice trend here. So we pipped into that trend for the fourth, or that trend for the third time. Lovely support, nice doji, sort of inverted hammer actually yesterday on the pattern. I think we can push back up. So that's my thesis for equities for today. I mean, it is quite resilient looking, I have to say, but we'll see. These markets have been very tricky lately. Nasdaq did get back to its 20 EMA yesterday. Really strong performance by tech by comparison to its counterparts as well. So do keep that in mind as you're trading today. Probably time for a little bit of a pullback today on tech. And then the dollar. So we did the analysis yesterday in the dollar. Lovely continual just push to the highs. You're now bull flagging on the Dixie. So I am expecting a break to the upside. If we do come to the downside, I expect that to be faking out on the downside and then back inside of this channel and then push. Target is up at the R1 and this Fibonacci extension, 123.6%. That's coming in at 107 spot 44s. But generally, I think this is a really big target for the Dixie now. I think if we were to get up there, I would look to, normally I would look to be, maybe taking the inverse move on the euro. However, the euro is just in complete free fall now. And if I pull up you've got the euro index here, top left of your screen, right? If we pull up euro USD on, say, the 60-minute here, all right? You can see that actually we are only a short hop, skip, and a jump away from parity, all right, with the dollar. Okay, so just to give you an idea, from where we trade right now to parity is 2.39%. Let's call it 2.4% down. We could do that in one session. Maybe by the end of this week, we have parity between the euro and the dollar, which, I don't know, makes things easy for me traveling to the States on a holiday. But Do I like it? I don't know. Do I like it? Probably not. Probably not. I'm losing a bit of value there on my spend, but that's fine. All right. And then just on the Bund was really driving the risk off move yesterday from early doors. So you can see it really just got on up there. A couple of the guys in the room really catching the bulk of this move. I caught a little snip of this move on the initiation down here. Target up 152.16 anyway on the Bund. So with the risk off move still evident from the bond market, it's going to be hard to really get on the longs for equities, you know. All right, so I'm going to leave it there for today and for the next 10 days. So I'll see you again on the 18th of July. And until then, be safe out there. All right, take care. Bye bye.